Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, October 22nd, 2012. Okay, let's start off by looking at the S&P futures. We finally got a little activity on Friday. We got a lot of activity, down 27 handles on the S&P. Everything that I've been looking at and telling you about for the past 7, 8, 9 videos has taken place. This inside trend line that goes back to the beginning of September held. We did a turnaround, and it wasn't just the Google earnings, it was the McDonald's earnings, it was everything that's going on in China, in Europe, the banking system. And we finally had this flip to the downside, this long candle down. It's already overnight session on Sunday night. It's now 6:45 Central Time on Sunday evening, and it's already flirting on the daily. It's already flirting with the 55 exponential moving average. It should go through that like a knife through hot butter. That's not going to hold it. I seriously doubt whether this trend line, this bottom trend line that goes all the way back to June is going to hold. So right now I'm looking for maybe even as early as tomorrow 1406 on the S&P, and it could go much further than that. Basically 1406 matches the pre-Bernanke, pre-ECB announcement. This is a reminder, this is the candle on the daily for the Bernanke announcement of $42 billion liquidity input into the economy every month. This is the ECB announcement by Mario Draghi, and all these, the ones that went across for 3 or 4 days was the Chinese version and the Japanese version. Neither of them worked, and the market started going down. But then it came back up against this trend line. It tried for a new high, came down again to the 55 period exponential moving average, came back up to the trend line and dumped. In the meantime, T1, this is T1, T2, T3, T4, T5, standing for Triton waves. They were getting more and more below zero each time. I expect before tomorrow morning, or even before or during tomorrow, all of T1 will be below zero. That puts a whole new light on the market. This market is done for the upside. So every play that you have will be an opportunity. If you're lucky enough to get some kind of play to the upside early Monday morning, then take it as a shorting opportunity to the best stocks to short, and we'll go through with that in a minute. Also, I wanted to show you on the right-hand chart, I was following the 1597 tick chart, and this is the beginning of the day on Friday, and it's kind of, the T1 is kind of choppy, and T2 is, which signals to me that there's so much activity going on that instead of using the 1597 or the 987 on a slow to medium day, we have to go to the 4181. So it's just a matter of flipping around between the Fibonacci tick charts. And again, these are the numbers that I use everywhere from stocks at 144 tick to 233, and then the S&P's 987, 1597. I rarely use the 25, but I do use the 4181. So you can see, nice turnaround right from, it started going down right at the start. It moved below the 377 exponential moving average, which is a clear sign of the downside. Also, I just noticed on the left-hand chart, once again, the 8 period was moving below the 21 period. So we were up 200 to start, up 2 points on the S&P to start the evening session at 5 o'clock. And we've already done a reversal of, let me see, it was 1426 at the high, we're already down to as low as 1420.75 and 1422 right now. So you can see in the bottom as I go through the charts, it's down 175. This is a live tick chart right here. All right, let's look at some stocks here. Okay, Goldman. All the charts, the waves actually look pretty good on Goldman for the upside. I just don't like the way this is coming off the top. I don't like the way this looks. It's already had like almost, let me see if, I believe that's almost a 1272 extension here. So let's take a look. This is a 1272 extension before it backed off. So if we come over and look at the 21-minute cash price on Goldman, T4 just went below zero, and it's the first time that's been below zero in any way since the beginning of October. So that's a sign that this daily chart on the left may roll over a little bit because the 21-minute is rolling over. So I expect Goldman as a target. It's not a big target, but 120.80 to begin with, and we'll see if that knocks over the long wave on the 21 and takes Goldman below zero, like to 114, 115. It could come all the way down to 112, which on the daily chart is, well, let me see. On the daily chart, it's to 377. So that could work out really well. That could work out perfectly. Okay, Amazon. If you remember, we had a target of about 270, 268. It actually only reached 260, 262, so 263, and we bailed out of that then. But then T1 started going down below zero. T2 started going down below zero, and at this point, T2 is completely below zero. So any kind of move to the upside on Monday on Amazon, and also I believe they're coming out with earnings tomorrow. So if you're lucky enough to get an uptick before the earnings, Amazon is definitely a short candidate. And given what it's done in the past on earnings, I think I had, let me see. I remember in the past on bad earnings it came straight down to 200, bounced off of it, and went up to 225 by the end of the day. So this is going to be a short-term, very high-yielding put position. Oh, in addition, I wanted to point out that that the VIX was up. Let me see here. The VIX was up 2.03, which was a 13.5% move to the upside, which is enormous. And we'll be looking at the VIX in a minute, but right now, I just wanted to point out that it means very high volatility. They're giving more, an increase in value for out-of-the-money puts and calls, and it's exciting. This is what you wait for 5 years for something like this to happen. So it's very exciting. Just hold on, buy puts when you can on any kind of retracement to the upside, and we should have a really good, if you call it fun, massive dumping. If you're long, just make sure that you have stops in place. One of the things about the institutions is they've been riding this all year long for a tremendous gain in some of these stocks, including Apple, and they are not going to go into the fourth quarter losing what they have made. So if they see that this is coming back, if they see that the Aussie yen is coming down, which is risk off, then they're going to start dumping these stocks just as a preservation of their own capital, and in addition, preservation of their own jobs. So look for this market to tank, and then when the little guy gets in after they see the big commercial um, dealers come in and sell, uh, literally all hell can break loose. And I don't use that loosely. Okay, Baidu. Fundamentally, Baidu, with a it's kind of like a gradual tapering off, slowdown in the Chinese economy. I know people refer to Baidu as the Chinese Google, or well, it is the Chinese Google, but they call it Chugal in some circles. It's on the daily. It's been going up and down and up and down between, it's about a 10-point range all the way back to the end of August. And it was shortable every time it got up here, recommended shorts every time it went up, even though sometimes it made me really nervous to watch it, because I was inputs on some of these. But the fact remains is T5, which is the long wave, is still buried below zero. So at some point, a lot of Baidu is going to come off. Now, on the 21, T1, T2, in the last 2 days, T1, T2, and T3 are buried below zero. T4, let's see here. T4, half of T4 is below, part of T4 is starting to go below zero, and part of T5. So, okay, I didn't see that until just now. Outright put buying short on Baidu. Target being, let's find a target on here. I still like, it's 112.38. I still like 100 as a target. The bottom back here in July. At least the first target of 105.88. Take half off. If you're lucky enough for it to go down to 100, take the other half off. All right, let's take a look. Netflix. Netflix looked like it was going to the moon. It had this. It has had a tendency of making these space shots, 62 to 87, and then 53 to 66, and now 53 to 70 to 74. Every time they've come back down again. Their model, their business model, leaves a lot to be desired. Even though the waves are above zero, this becomes a play on the 21. If you look at the 21 down here, it's in nice synchronization of what it's doing. If you look at the C, I'm sorry, not the C, T3, going above zero in the beginning of October, and for a nice run all the way up here. And if you follow the rule of thumb, when it comes down below zero, then on the next wave up, on the next smaller wave, then you get out. So if you're using let me see, this is the 144 exponential moving average as a target. Once it broke through here, then you would have already dumped some of it up here. And then this becomes shortable back on T2 on the 21. So you're basically going back and forth between the daily and the 21 and sometimes the 5-minute. Again, this came back up, so if you were short here, you would cover it when T1 went above zero, and short again when T1 went below zero. So on this latest move, it went below zero basically at the beginning of the trading day on Friday at 67, and it had a low of 64. So that would have been a nice trade even by itself. Okay, if you have been following the videos for a while, you know that we put a recommendation into short Apple way back up at 670. And it's currently at 609.84. Let me see here. As far as a target goes, and actually, that on the daily, it looks like where my cursor is on the left-hand side. That's just after not only did the 8 and the 21 cross, but what I like to wait for is a confirmation because it's a little more conservative. A confirmation on T1, which is this little tiny hash mark right here below 0. So that happened at 670, and you can see on the on the right-hand chart, the 670 when it bumped against the 377, and then so you don't have to wait for the hash mark on the 21 to come down because it's already confirmed it on the daily. So when it hits the 377, that is the short. So you're at let me see. So you actually could have gotten a little bit better price at 672 instead of 670. Okay, so the confirmation again on the 21 is when the 21 goes below 0. And then you cover it. You know something I kind of like the 15, the idea of the 1597 following this. Let me see if I have enough data here to look at this. Well, it fills in slowly on this computer, but you can see like you can get a closer fit to what the waves are doing to the actual time. So let me see here. Okay, so on T2, very clean crossover right here. T3, very clean crossover. They all happened 3 days ago, 3 trading days ago at 647. And you know, if you look all the way back here, if the data eventually fills in, then you get the same opportunities at 670. But just on Wednesday, Thursday, Friday, 650, and then that comes all the way down to where we are now. So it hasn't at this point you ignore the smaller waves when there's such a horrendous downdraft, and you go to the more stable ones like T2 or T3, which is kind of like just edging around 0, but 5, 4, T5, T4, and T3 are well below 0. On the daily, T1 is below 0, T2, T3, T4 is moving its way, and T5 it won't be there for a few days. So it'll trickle down. There's a possibility that this could hit 563. I would not be surprised. Maybe a little bounce. If you're lucky enough to get a bounce off of 604 or 606 back up to the 89 exponential moving average, 632, that'd be a lucky trade. But if you wanted to wait for it to come up on the 1597 tick chart, that's actually the 377, which is like a perfect play. So if you're lucky enough to see this come back up to 630, which right now is a 21 point move to the upside, then wait for it. It's shortable. Go for it on the downside. Also, I wanted to look at the T5 and T4. Notice the cash price on was 644 and 707, and the waves on T4 and T5 are non-confirming. So the cash is higher high, the waves are lower highs. It's definitely a sell signal. And if we put a little fib tool on this at, let me see here, right there, it almost made it up to, going all the way back to April. April is the high, and May as the low. This hit in between the 1272 and the 1618 extension, kind of right in between. So very nice play to the upside, but again, non-confirming, and all the waves are heading below 0. So as much as people love Apple and as much as they love their positions in the market, there are a lot of institutions that hold huge positions in Apple and have made 100-200% of their money and had their portfolios look outstanding. They are going to want to preserve their capital, so they may take a lot of this off the table. So look for Apple to continue down, if you get it, if you, I wouldn't short it right here, but I would wait for a retracement to 629. If you follow the 233 down a little bit, it might be, just follow the curve around. It might be 630, might be 628, but somewhere in that area. So one more thing, I wanted to show you the comparison between the new Triton waves. Oops, let me get rid of this. The new Triton waves, which are over on the left, and my ABC waves that I've been using for about 3 years now. And as I say, the Triton waves will not be available as a download to trade with, but the ABC waves are. So let's just take a look at the comparison here. And actually, it ticked off a little bit sooner on the ABC waves. The problem with the ABC wave is there's a, if you look at the comparisons, most of these stay below zero, even though there are upticks that might scare the bejesus out of you. Like T2 down here stays below zero, but on the A wave over here, on the same part, they tend to trickle above zero, and sometimes they fool you. Which is why I went to the longer, smoother wave on the left, the Triton wave. But this still would have been a nice play at the 377, and a move below on October 17th, and that's still the same play, 648 down to 609. So it's a heck of a play. All right, I want to take a look at VIX. Let's see here. Let's see what the VIX is doing. Let me see, 21. Make this a daily. And okay, you can see that on the daily, T1 is above zero, T2 as of Friday is above zero, as of Friday T3 is above zero, T4 is about to go up. That is good enough for a major run. So I'm looking for at least 2025 on the VIX. Now there probably will be some retracement because nothing goes straight up. So there may be some retracement down to 16 before it takes off. But basically, this is going to be a zigzag pattern to the upside. Now, it's very clear on Thursday, and especially at the end toward Thursday, that once this went above zero on T1, T2, T3, T4, and T5, it just like followed sequentially. That this market was, as long as the VIX is going up, market's going down. That's all I have for this evening. Good luck trading, and hope to see you at the next update.